What is a temporary rate buy down? So what I want to walk through is something that many people have been taking advantage of in a higher rate market, and it only typically works when it's not a complete seller's market. It's because it requires the seller giving credits to cover certain costs for the temporary rate buy down. So if it is a seller's market and there's going to be 10 plus whatever offers, it's very difficult to get. But as we've experienced for the last year or so, and the market here, we are entering we're a month into 2024, there's still opportunity, and we still are seeing this happen at times, just depending on the property and the competitiveness. But here we are. So the purpose of it is to give buyers a lower monthly payment temporarily, in the hopes that rates are coming down and they can refinance eventually. So a 2-1 buy down, the 2 in the 2-1 buy down, the 2 means that it's bought down for 2 years, but it's also that it's 2% below the market rate. So let's just say the market rate for a 30-year fixed mortgage is at 7%. That means your rate for the first year is going to be 5%. The 1 then means the second year it goes up 1%, so it's 1% lower than the market rate, so it'd be at 6%. And then years 3 through the remaining 30, if you kept the mortgage, would be at that market rate of 7%. So what that looks like in terms of a monthly payment, so let's just look at this scenario. We have let's see, this is a 600 and something thousand, $600,000 price, 3.5% down, FHA mortgage, single family, 6.25% note rate, so start rate. So if we look at the subsidized is the subsidy payment. So what happens is the seller has to pay for this. There's a cost, and you'll see is the cost for that towards the seller is $13,490. So they're giving a credit of $13,000. Now what that does is that money goes into an escrow account just like your property taxes or your home insurance would, and then what happens is you're making a monthly payment. For instance, in this scenario, your actual mortgage payment is, with taxes, insurance, and everything, is about $4,500. But in the first year, you're paying $3,800. So there's a difference of $729. So what happens is each month you're making a payment for the first year of $3,800. The lender is taking $729 out of that $13,000 that was deposited into the escrow account. So the payment still is the $4,500, but you're only responsible for the $3,800, the temporary buy down portion. So the mortgage is still being paid down as if like there was no buy down in place, but it's being paid by the seller. Essentially, it's the seller paying a portion of your mortgage for the first 2 years. So year 2, so month 13 through 24, you'll see it's $374 less than the actual mortgage payment. So you're paying $41.79 in this scenario. And then until year 3, then there's nothing left in the account, and you're back to making a normal mortgage payment, which ideally is somewhere in this range you've refinanced and hopefully gotten a lower rate. Something to be aware of, another positive thing about the temporary buy down is if you were to refinance, let's say you refinance 6 months in, so you've only used 729 times 6 of that, of the funds that were of the sorry, how much was it? It was $13,000 that was deposited in the escrow account. Whatever is left in that escrow account, whenever you refinance, gets refunded back to you. So you get those funds back. So it's kind of a safety net in place that you're getting those funds regardless. Either it's going to be used to keeping the payment down, or when you refinance and you get a lower rate and you don't need it anymore, that money goes back to you. There's a 1-0 buy down, which just means it's only bought down for 1 year, and it's 1% lower than the market rate. There's also a 3-2-1, which means it's 3 years. But keep in mind that the 3 years, it's more difficult because obviously it's much larger credit you're asking from the seller, and you also have to be aware of there's max amounts that the seller can contribute depending on your loan type. So you have to be aware of those things too.